From Wall Street to Main Street to help small business owners have the same capital as corporate America and give them the same resources as a larger company. We cover business funding, business credit, scaling, business consulting, and much more. Check out the website at shieldadvisorygroup.com. Welcome to the show, The Liquid Lunch Project.
Hey, what's up, everybody? Welcome back to another episode of the Liquid Lunch Project. I am Matthew R. Meehan, alongside my partner and co-host, Luigi, the Professor Rosa Bianca. What's going on today, Lou? What do we got on tap?
Matt, you're going to put on your academic hat for this episode. The capital market system is a perfect system. It has this perfect synergy, supply and demand. It's very difficult to disrupt it, because it's on a tightrope of mathematical balance. And for it to work, there has to be a certain honesty, a certain integrity, and a certain transparency, right? And every small business owner in America has to deal and rely upon that capital market system. There's a reason social systems don't work, i.e. Venezuela, Cuba. Every once in a while, someone comes along with a jockstrap the size of a barrel that says maybe we can make the system more perfect. And today, on the Liquid Lunch Project, we have that person. Noah Healy, welcome to the Liquid Lunch Project.
Yeah, thank you, Lou and Matthew. That was quite the introduction. Thanks for having me here.
Oh, it's our pleasure. Let's dig right into it. What is Coordisc?
So Coordisc is my essentially IP company for my idea for coordinated discovery markets. And what coordinated discovery markets do is recognize that in addition to supply and demand, every deal has information as a critical component. And so I've found a way to produce a three-sided rather than a two-sided marketplace where information, supply, and demand come together in a convergence. And by doing it in this fashion, the entire system can become considerably less expensive than the capital markets that we presently use.
So give two simple guys like Matt and I an example on how this would work, for example, in the commodity market.
So the first thing to understand is that what we care about is moving the physical stuff around. And that happens relatively slowly because we can't teleport objects. So you don't need instantaneous pricing in an environment where you're going to stick something on a truck or a train or a boat and have it arrive a day or a week or a month later. So what we do is we set up a schedule of trades where every day, say, a new trading opportunity occurs. And for each of those days, we establish a price. And that's where the prediction market comes in. People who believe that they have information about where prices are heading give that information to the marketplace, invest some money with it, and get a share of the ongoing revenue stream from the trades based on how much of their information turns out to be useful. And so people who want to buy and sell see what the price is for today, see where it looks like prices are heading in the future, decide how much they want to trade now. If they don't want to trade something, tomorrow's another day. A new price will be there then. It'll be pretty close to the price that's being projected. And so small businesses that need to buy steel or sell corn will simply make a decision. They can look at how the markets are, how the markets are going, and decide when and how much they want to participate.
Now, Noah, how does your format address things that are just unpredictable? The advent of war, acts of God, hurricanes, floods, a poor harvest.
Some of those things, like the poor harvest, for example, in fact, are predictable. And in those cases, a poor harvest, prices need to go up. As the disasters start to accumulate, particularly across a broad region, current and future prices will be driven up to reflect the fact that there's just not as much supply as people were maybe thinking a year or two before. So much like the existing system, as supply dries up, price goes up. As demand increases, price goes up. But as supply increases, price goes down, or as demand dries up, price goes down. Sudden changes are addressed by the marketplace adjusting the cost of prediction based on how much business it's doing. If a price is wrong for a day or maybe a couple days, because, say the Suez Canal gets blocked or a war starts, then what happens is the transactions through the marketplace depress because suddenly you can't make deliveries so much anymore. And that lowers the total volume of the market. And so the market says, well, it's a lot cheaper for me to change now because I'm not offering as much return. And so if either through natural disaster or, man-made mania, the market wanders off course, it becomes very inexpensive for people who recognize what's going on to put the market back on track.
Noah, what is the goal of your format? Is it to create predictability and consistency in price?
That's a major goal, but existing markets can more or less do that. The goal is to match the existing market's capacity to do pricing, but at a lower cost to the market itself. And that overhead goes directly to the bottom line for these low margin small businesses.
So you're saying that if we were to implement, and I say we as the United States, or maybe even on a global scale, but if we were to implement your format, the price of a glass of orange juice and a cup of coffee and maybe even hot chocolate would be lower?
In the medium to long term, yes. In the short term, I would guess that consumer prices would remain roughly the same, but producer profits would wildly increase. So if you think about a business operating at a 15% margin that's losing 5% of its prospective income to market friction, if we see a CDM come in and drop that to 1%, then their margin goes from 15 to 19%, and that's a considerable boost to their actual bottom line. And that kind of shift would then draw in new producers. So for something like oranges, it might take a few years before people are producing enough oranges to bring the price back down. But coffee, it grows a lot faster than that. So that would move more quickly.
Now, well, lucky for the audience, we also have my partner, Matthew Meehan here. Matthew, explain to us how the commodities market has changed from the yelling and screaming Yahoo days of the 70s and 80s to the commodities market of today. Like, how does somebody buy a pork belly today, and how did he buy a pork belly in the 70s?
Computers. Computers. It's really that simple. There's no more paper trading. There's no more people yelling and screaming on the floor. Everything is done instantaneously over a computer. However, we're not usually taking delivery from the way I would trade commodities. We're usually just trading the contracts and trading pieces of paper. If we looked at a couple of years ago when oil came down, it almost went negative if it didn't go negative, right? So you could have got barrels of oil if you just took delivery of those barrels of oil and you had a warehouse big enough to store it, you'd be selling it at all-time high prices today.
So then is Noah's concept the natural evolution of where the commodities market's going to end up?
I think so. But Noah, does your concept work with blockchain technology too? Aren't those making markets more efficient?
So what blockchain technology does is it provides a forum for marketplaces to exist that doesn't rely on sort of the traditional country regulatory environment to support the fairness and sort of trade non-reputability that's necessary, because if I make a trade and then it goes against me and I'm like, oh, I didn't make that trade, you can't have your money, then there's no reason to get involved in that situation. So blockchain can create a situation where people actually have to enforce their contracts without having a country backing it up. I am working with a few people who are working to incorporate my technology on blockchains, as well as a few people who are working on sort of more traditional market spaces around the world. But blockchain or not blockchain technology is independent of this particular price discovery mechanism.
So, Noah, were you always a numbers guy before you decided to reinvent the capital market system? Where did you come from? How did this idea arrive? What did you do?
Yeah, I've quite literally always been a numbers guy. I was the fastest counter in my kindergarten, for example. I mean, that's not much, but yes, I've always been a numbers guy. I'm a recreational mathematician, and I got interested in the problem of consensus on networks. Uh, we see this a lot in the internet. It gets very easy to sort of form tribes and bubbles. And so this is something that occurs in the Internet of Things and sensory arrays. It gets very easy to get bad and weird signals from systems. And so when you have relatively independent agents or sensors or whatever, finding consensus is a relatively difficult thing, particularly if the agents or sensors themselves don't have much of an interest in it. And so I was working on that problem just out of personal curiosity, and I found a game theoretic approach where somebody interested in the consensus would be able to pay essentially in an efficient manner for the network to come to an agreement. And then just sort of to next level that, I decided to figure out a way to make a network efficiently pay for its own interests in having consensus. And that's what markets are. Markets are networks of people with a common interest in consensus knowledge that are presently paying for that knowledge through the existing capital markets. But since this is mathematically a more direct way to do that, and mathematically a radically more efficient way to do that, this allows disparate businesses to work with one another at less cost.
Noah, I'm throwing this out there, and I don't know if I'm right or wrong, but part of this journey that we're on with the Liquid Lunch Project is just to educate. Is there a fine line between hyper efficiency and transitioning from capitalism to socialism?
So I don't think so. And the key thing is that I haven't eliminated competition, and I haven't changed sort of the rules on what makes a winner or loser. What I've done is corral the competition so that it isn't an all against all play. So right now, in an existing commodity market, sometimes farmers have to buy because if they made a sell deal that wasn't that great, they might have to buy it back out again in order to get into a better deal that they'd like to have. Sometimes a refinery would have to sell. That's what you were referring to earlier, where there was the oil tight and then the glut, and nobody had enough spare capacity, and so that's why they were paying people to take oil because the existing tanks were all full. But competition works better when it's people who are doing the same sort of thing competing with each other to do that thing better.
So my concern becomes where, let's say Matthew is a much better farmer than Lou. And Matthew looks at a baby shoot of a coffee bean. And he says, you know what? This is going to be a good harvest. These futures are going to be worth a lot more. And I come along, I don't know the difference between a coffee shoot or a cocoa shoot or a marijuana shoot. What the hell do I know, right? I'm just speculating because I'm a day trader. Don't you think Matthew should be rewarded for his expertise rather than having Matthew play in a homogenized sandbox?
Well, yes, and that's why the existing homogenized sandbox I'm getting rid of. So Matthew, the expert farmer who now has real information about a great harvest, can go into my forecasting market and put that information in and not just reap the benefit of that one trade he could do, but take part in every trade of every person across the entire marketplace automatically. getting much higher returns than he could ever hope to achieve as just a farmer who happens to know his business.
Seems sexy. So is this platform proprietary?
So I'm working on a patent in the United States. It is open source overseas, and I'm licensing out with several people. My basic plan is to make it proprietary, sort of regionally and within an industry, just to give operators a reason to take the risk of setting up something new. But that's where things stand right now.
Great. Is there some sort of cross application throughout markets, or do you feel that there is a certain privilege here with commodities just because of the way the commodities markets move?
Commodities are the simplest from a strategic standpoint marketplace. Other kinds of markets could work out. So, for example, many sovereign bonds aren't rebought by the country that issues them, which makes them relatively commodity-like in their transition. And with appropriate regulatory environments, pretty much all financial assets could be traded on these sorts of marketplaces. But I feel that sort of gaining useful experience with the simplest types of markets first is really the way to go.
Folks, I think you should take a break from this podcast right now, put us on pause, and Google trading places, the learning of the commodities business. Great movie from the 1980s. It's a 30-second skit. You'll die laughing. It's Eddie Murphy at its prime. And then press play again, and we'll continue this conversation. Because I got to tell you, the commodities market is a obscure, inane sector of the market that many people aren't familiar with it. So thank you, Noah, for exposing us to it.
Thank you. Yeah, I think it's sort of a shame that this thing that is the foundation of, where the food that we eat and the cars that we drive and everything else is this sort of off in the corner, mysterious, nobody actually knows what's going on type of a thing.
I'm still dying. Like, I'm watching a Ranger game, and maybe I'll get curious. I was like, you know what? How do you become a really good skater, right? You're a recreational mathematician. How did you come up with this idea? I mean, are you one of those in-the-closet geniuses?
The clinical term genius refers to 2% of the population based on IQ, and I do have one of those IQs. But recreational math is not terribly uncommon. Sudoku is a global phenomenon, and that's people who are doing logic for fun, essentially. There's a lot of rewards and beauty in the structure of reason and thought. And probably the best thing about it is that it has almost no material costs associated with it. You can literally take a walk around the block or sit in your bedroom and imagine these things that are both beautiful and real. And so, yeah, once you've found that out, it's a hard thing to resist.
What was that movie with Russell Crowe? Was it It's a Beautiful Life? Is that the name of the movie?
Beautiful Mind.
A Beautiful Mind.
John Nash. He was not the original game theorist, but he came up with the Nash equilibrium at the end when he wins the Nobel Prize. That's what he's winning it for. And one of the things that's intriguing about that is that evolutionary games, like the kind of market I'm proposing, have this trait that they converge on, usually fairly rapidly, the Nash equilibrium of the underlying game. And so that's how my CDM system is designed. It's a game where the Nash equilibrium of the game is a functioning marketplace. So everyone will just create a functioning marketplace because it's in their personal interest to do so.
No, I got to ask you, do you know what the scariest number out there is?
In number theory, there actually are some scary numbers, but I doubt you're referring to those. What do you have?
7, because it's 8, 9.
Okay.
Oh my, we have to go there.
But I want to hear more about these scary numbers in number theory. Tell me a little bit about them.
I've only just heard about them, and I've never really explored them in much depth. But in number theory, there are a lot of descriptive terms. Probably the most famous are perfect numbers. Perfect numbers have the trait that their proper divisors add up to themselves. So 6, 1, 2, and 3 all evenly divide 6. 1 plus 2 plus 3 equals 6. The next two are 28 and 496. And a couple hundred years ago, a guy figured out a way to crank out all of the even perfect numbers. And if you've seen any, sometimes these things make splashes in the news, discoveries of new huge prime numbers. The prime numbers that we find huge ones of are called the Mersenne primes. And it turns out every Mersenne prime is associated with a perfect number, which is very nearly, it's about half of its square. Is the value of the perfect number that's associated with a Mersenne prime. So that's a thing. Scary numbers, I think they were rather designed, because I'm pretty sure the second one is 666. But it's some set of number properties that allows a sequence that goes from like 13 to 666, and then there's an infinite number of them after that.
Noah, my partner opened up the Pandora's box. I gotta go there. So there's a couple of traders out there, well-known traders, that rely upon the Fibonacci sequence in trying to predict equity markets. Now, the Fibonacci sequence is just some random number sequence. Is it a number sequence, or is there some sort of...
So the Fibonacci is a number sequence, but I would not describe it as random. It's a sequence that's developed by something that's known as a recurrence relation, where the current value is dependent upon the two previous values. And there's an attachment also to the natural world, because certain kinds of breeding populations actually grow at Fibonacci rates. And so what you're doing there is you're using a regressive and logistic logic, where the past has an influence on the present, which of course it does, and things tend to develop in a manner that is what's known as a logistic function, where when things are far away from where they ought to be, they move very quickly towards where they're going. And when things are close to where they ought to be, they sort of move slower towards where they're going. And under certain parameters, things start to behave chaotically. And so different sequences, that's another one of my interests, sort of allows for calculus to work on just sequences of integers. And it's the kind of thing that you can actually teach to children. The first time I was introduced to difference calculus, I think I was 10 years old. No, 9 years old.
So that's how we create recreational mathematicians.
Once you see the beauty, then you're hooked.
Noah, I really appreciate you opening up one of our touchstones here at Shield Advisory Group. Matt and I are obsessed with measuring everything, because if you can't measure it, you can't improve it, right? That's the job of a small business owner. If a small business isn't scaling like a shark, it's sinking. So you have to measure everything so you can constantly improve everything. So thank you for exposing us to the world of mathematics today. The challenge is you're taking on a system. You're poking the bear. You're poking a big, ugly bear. How are you taking on that bear? I mean, do you have a big bear trap? Do you have a big jar of honey? How are you doing this?
Mostly by being as, open and accommodating as possible at all times.
The jar of honey. You're going
Yeah.
for the honey before you go for the bear trap.
Yeah, but I have been pursuing the patent for the better part of a decade now, and that's gone sort of full 1984. I've had 2 notices of allowance, both of which have been withdrawn by the patent office, and that's something that none of my attorneys nor any of the other people in the patent space I've ever spoken to have ever heard of. I was just at an entrepreneurial get-together in town here last Tuesday. I met a woman who works for a university's IP department, and a guy who's a process engineer, and another guy who's a semi-retired biotech patent lawyer, and told all three of them my story, and none of them could even imagine that could happen. So yeah, I'm in a weird place right now.
But you seem wildly persistent and talented, so I feel confident that this patent will be issued eventually. And then once it's issued, what's the future for Coordisc?
Well, like I said, my plan is licensing. So there's a handful of people around the world that are trying to get these things off the ground. Once they're off the ground, then customers can start experiencing the lower cost and greater clarity of pricing. And that becomes its own calling card, because at the end of the day, there are more similarities between the markets for oil, aluminum, and rice than there are differences. And so if somebody sees coal or copper manufacturers suddenly making a lot more money because they've got better markets, they're going to want that for, oil and potatoes too.
Noah, thank you so much for being here. Can you tell everybody how they can get in touch with you? Can they find you on social media? Should they go to your website? What's the best way for the audience?
Well, the quickest way to get in contact with me is actually my email address, noahphealy@yahoo.com. But you can find me, and feel free to connect on LinkedIn. I'm the Noah Healy on LinkedIn, and I've got a website, coordisc.com, where there's some video explanations of this, my white paper for download, and a bunch of other information about, how the system works.
Noah, one last question before we let you run. When I go to Vegas, what's the best game to play?
Watching the fountain. I worked for a company that makes slot machines, and a lot of people have asked me that question. Let me tell you, don't play. If you're ahead, quit now. If you're behind, quit now.
You guys are just a couple of bookies.
One of the COO of one of the companies I worked for described them as reverse ATMs.
I love that. Noah, thank you so much for being here, folks. That's a wrap of the Liquid Lunch Project. We'll see you on the next episode.
Thank you for listening to the show. And make sure you subscribe, leave a review, and share it with a friend. We'll see you on the next episode of the Liquid Lunch Project.